right now. Someone in the UK is earning £12.71 an hour, staring at their bank account on a Wednesday evening, wondering whether they can afford a takeaway this weekend. And right now, someone else is earning £250,000 a year, staring at their bank account on that same Wednesday evening, wondering why they still feel like they can never quite get ahead. Both of those situations are completely real. And today we're going to walk through every major salary level in the UK in 2026, from a national living wage all the way to the top 1%, and show you exactly what life looks like at each one. Real gross numbers, real after-tax take-home pay, real monthly budgets, and the honest truth about what each salary actually buys you in Britain in 2026, because the gap between what a salary looks like on a job offer and what it actually feels like in your bank account every month is one of the most important pieces of financial information most people never properly sit with. Let's start with something that frames everything else in this video, and that is where the UK population actually sits across the income distribution, because the numbers are genuinely surprising to most people. According to the latest ONS annual survey of hours and earnings, the median full-time salary in the UK in 2026 is £39,039 per year. That is the number right in the middle of the full-time earnings distribution, where half of all full-time employees earn more and half earn less. The mean average sits higher, at around £43,000 to £44,000, pulled upward by a relatively small number of very high earners at the top. And if you include part-time workers in the calculation, the overall median drops to around £25,000. What that tells you is that if you earn £39,000 or above as a full-time employee, you're already in the top half of British earners, and at £50,000, you are comfortably in the top quarter. Most people dramatically overestimate how much their peers are earning, and that overestimation is a significant driver of lifestyle inflation, financial anxiety, and a persistent feeling that no matter how much you earn, it is never quite enough. So let's start at the bottom and work our way up, and let's use real numbers throughout. The national living wage is the legal minimum hourly rate for workers aged 21 and over in the UK. From the 1st of April 2026, it is £12.71 per hour. For a full-time worker doing 37.5 hours per week, that produces a gross annual salary of £24,784. That puts you at approximately the 15th to 18th percentile of full-time UK earners, meaning roughly 4 in every 5 full-time employees earn more than this. After income tax and national insurance under the 2026-27 PAYE system, your take-home pay on a national living wage is approximately £19,800 per year, or around £1,650 per month landing in your account. Now, let's be very precise about what £1,650 per month actually buys you in 2026, because this is where the conversation becomes genuinely uncomfortable. The average monthly rent for a one-bedroom flat outside London is currently running at approximately £800 to £900 in most mid-sized English cities, and significantly more in Bristol, Cambridge, Oxford, Edinburgh, and any London borough. If you are paying £850 in rent, that is already 51% of your entire monthly take-home pay gone before you have bought a single item of food, pay a utility bill, topped up your travel card, or put petrol in your car. Groceries for one person cooking at home most nights cost roughly £200 to £230 per month. Utilities including electricity, gas, water, and broadband average around £170 per month in 2026 following the energy price adjustments that took effect earlier this year. Transport, whether a monthly bus pass or the fuel and insurance costs of a modest car, adds another £60 to £150 depending on where you live and how you travel. That is before a single pound has been spent on clothing, a haircut, a phone contract, any form of social life, or the kind of occasional unexpected bill, a car repair, a dental appointment, a broken appliance, that life reliably produces regardless of your income. On the national living wage in 2026, saving anything at all requires active and deliberate management of every pound, building an emergency fund, contributing to a pension beyond the mandatory minimum, or putting money aside for a future goal is not impossible. but it requires choices that feel genuinely restrictive every single day. This is a financial reality of around 3 to 4 million people working full-time in the UK, not in poverty by the technical definition, but with almost no financial buffer between their income and the edge. Now, let's step up to £30,000 per year, which is a salary level that many people think of as modest, but which actually sits meaningfully above the national living wage and above the median for all workers, including part-time. £30,000 puts you somewhere around the 40th percentile of full-time earners. After income tax and national insurance, in 2026-27, your take-home pay is approximately £23,560 per year, which works out to £1,963 per month. That extra £313 per month, compared to the national living wage, makes a meaningful practical difference. It might cover your grocery bill entirely, give you the breathing room to save £100 to £150 per month, or allow you to have a modest social life without the constant background anxiety of checking your account before every transaction. But in any of the UK's more expensive cities, £30,000 is still fundamentally tight. You are likely sharing accommodation, either with housemates or a partner, and you are probably not in a position to build savings at any meaningful pace unless your housing costs are unusually low. The dream of buying a property on a £30,000 salary in most UK cities is, for the vast majority of people, not a realistic near-term prospect without significant additional family support or a dual-income household. The median, £39,039. This is the most important number in the entire UK income distribution because it is the number right in the middle, and it tells you something important about the gap between where most people actually are and where they feel they should be. After income tax and national insurance, the take-home on the median UK full-time salary is approximately £29,580 per year, or £2,465 per month. At this income level, things begin to feel more stable for many people, though the degree to which they feel stable depends enormously on where you live and whether you are renting or have already bought. £2,465 per month in Manchester, Leeds, or Newcastle, where rents are lower and the cost of living is more forgiving, goes significantly further than the same amount in London, Bristol, or Brighton. Outside the most expensive cities, the median salary allows for modest but real saving, a decent social life, some holidays within the UK or in Europe, and a genuine sense that you are making progress even if that progress is slow. In London, £2,465 per month after tax is, depending on your rent and commuting costs, often not enough to save meaningfully at all. But here is the trap that catches a huge number of people at this income level and above, and it is called lifestyle creep. Lifestyle creep is a tendency for spending to expand to meet income every time income rises, leaving you with the same financial anxiety at $40,000 that you had at $25,000, just with more expensive problems. Research consistently shows that the people who build real financial security are not necessarily those who earn the most. They're the ones who actively manage the gap between what they earn and what they spend and deliberately redirect that gap towards savings, pension contributions, and assets at the median salary. Closing that gap by even £200 per month and investing it consistently over 20 years can produce a genuinely meaningful sum. The mathematics of compound growth are entirely indifferent to your feelings about it. Now let's talk about £50,000, because this is a salary level that a large number of Brits treat as the threshold of having made it, and it is also the salary level where the UK tax system introduces one of its most important cliff edges. After income tax and national insurance, £50,000 per year produces a take-home of approximately £34,920, or £2,910 per month. That is a meaningful jump from a median, and in most UK cities outside London, £50,000 provides a genuinely comfortable life. You can rent a decent flat alone, save consistently, drive a reasonable car, eat out regularly, take proper holidays abroad, and still have money moving toward your pension and your future without it feeling like a sacrifice. But here is the cliff edge you need to understand. At £50,000, you're sitting right at the higher rate income tax threshold. Every pound you earn above $50,000 in England and Wales is taxed at 40% rather than 20%. combined with the 8% national insurance you pay on earnings between $12,570 and $50,270, and the 2% you pay above that, the marginal rate on earnings just above $50,000 is 42%. That means for every extra 100 pounds you earn above the threshold, you keep 58 pounds. This is why salary sacrifice into your pension becomes particularly powerful at this income level. Every pound you sacrifice into your pension rather than taking a salary saves you at least 40 pence in income tax plus some national insurance saving, making pension contributions at this bracket one of the highest return financial moves available to you. 75,000 pounds is a salary that puts you solidly in the top 10% of UK earners. Most people who earn this income describe their financial lives as comfortable, but the word comfortable covers a wide range of actual experiences depending on family size, location, mortgage or rent level, and the lifestyle commitments made at lower income levels. After income tax and national insurance, 75,000 pounds produces a take-home of approximately 48,796 pounds, or 4,066 pounds per month. At this level in most UK cities, you can live well, you have meaningful disposable income, genuine saving capacity, the ability to build real pension wealth, and the luxury of making decisions from a position of financial security rather than anxiety. But in London, particularly for anyone with a large mortgage on a property bought at peak prices, or with school fees, or with the combined cost of raising a family in an expensive city, 75,000 pounds can feel surprisingly pressured. The lifestyle commitments that accumulate as income rises have a way of consuming the difference. 100,000 pounds is where the UK tax system introduces its most striking quirk, and it is one that most people earning close to this level either do not know about or do not fully understand. When your adjusted net income exceeds 100,000 pounds, you begin to lose your personal allowance, which is a £12,570 amount of income you receive tax-free. For every £2 your income exceeds 100,000 pounds, you lose £1 of your personal allowance. By the time your income reaches 125,140 pounds, your personal allowance has been withdrawn entirely. What this means in practice is that income between 100,000 and 125,140 pounds is effectively taxed at 60%, because you're paying 40% income tax on your earnings in that band plus an additional 20% through the loss of your personal allowance. It is the highest effective marginal tax rate most UK earners will ever encounter, and it sits well below the levels most people would consider genuinely wealthy. The standard advice from financial planners for anyone approaching or above this threshold is to use pension contributions to bring your adjusted net income back below 100,000 pounds, restoring the personal allowance and dramatically improving your effective tax position. After income tax and national insurance, 100,000 pounds in gross salary produces a take-home of approximately 63,220 pounds, or 5,268 pounds per month. At this income level, financial freedom in a genuine sense, meaning genuine options about how you live and work, becomes accessible if you are disciplined about not spending everything that comes in. And then there is the top 1%. The threshold for the top 1% of individual UK taxpayers in 2026 sits at approximately £180,000 per year, with some recent estimates placing it slightly higher at around £200,000 depending on the data source. Above £125,000, the 45% additional rate of income tax applies, meaning that beyond the personal allowance having already been lost, every additional pound of income is taxed at 45 pence before you even consider national insurance. After all deductions, £180,000 gross produces a take-home of approximately £105,000 to £110,000 per year, or roughly £8,800 to £9,200 per month. At this level, financial decisions shift from necessity to strategy. The question is no longer whether you can afford things, but how you structure your affairs to minimize unnecessary tax, maximize the return on your investments, and convert active income into passive income that does not depend on your continued presence in a demanding role. So here is what all of these numbers add up to, because the most important insight in this video is not any individual salary figure. It is the pattern that runs across all of them. At every single income level, from a national living wage to the top 1%, The people who build real financial security and the people who feel perpetually behind earning the same money are distinguished not primarily by how much they earn, but by three things. First, what percentage of their income they keep rather than spend. Second, what they do with what they keep. And third, how long they sustain that discipline before allowing lifestyle expansion to consume the gap. Someone on £39,000 who saves 20% of their take-home and invests it consistently in low-cost index funds inside an ISA or pension will build more real wealth over 30 years than someone on £80,000 who spends 95% of everything they earn. The income is not the variable that determines the outcome. The gap between income and spending is the variable, and that gap is at least partly within your control regardless of where on this income distribution you currently sit. If this gave you a more honest picture of what your salary actually looks like compared to everyone else in the UK, please hit the like button and subscribe to UK Finance with Peter for more straight-talking content on money and salaries for people living and working in Britain. Thanks for watching, and I will see you in the next one.